The AI boom has a problem, and it's embarrassingly uncool: helium. Yes, the birthday balloon gas. While everyone was busy pricing in infinite software profits and robot everything, a war in the Gulf hit Qatar, which supplies about one-third of the world's helium, and suddenly one of the most boring gases on Earth started looking like a pressure point for chips, data centers, and maybe your very expensive tech portfolio. Spot helium prices reportedly doubled, which sounds ridiculous until you trace the pipe behind the wall, because this isn't really a helium story. It's a hidden bottleneck story, and once you see it, you can't unsee it. For years, helium was quietly living a double life. In public, it was party store fluff. In industry, it was one of those weirdly essential inputs nobody talks about because it's tucked deep inside bigger systems. And the supply was never that broad to begin with. The USGS put total world helium production at about 180 million cubic meters in 2024. That's not some giant sprawling market with endless backup plans. That's a niche pipeline with global consequences. And Qatar became one of the kings of it for a very unglamorous reason: gas infrastructure. Helium often comes out of the same natural gas stream, and Qatar built massive processing capacity around that. So, while most people were watching oil tankers and LNG headlines, Qatar Energy was also sitting on roughly one-third of global helium supply, hidden in plain sight. That matters because modern chipmaking is basically a skyscraper full of invisible plumbing. You see the glass tower, you don't see the pipes in the walls. South Korea is a perfect example. Fitch said about 65% of its helium imports come from Qatar. And South Korea isn't buying that stuff for a science fair. It's home to Samsung Electronics and SK Hynix, two companies sitting right in the middle of the memory and advanced chip stack. So for years, the arrangement looked stable enough. A small market, a concentrated supplier base, a few giant industrial gas firms like Linde and Air Liquide smoothing things out. Everybody kind of acted like the pipe would always keep flowing, but that was the assumption. And in early March 2026, that assumption stopped being boring and started being dangerous. So let's make this stupidly simple. Meet Tom. Tom runs a chip fab, and his factory needs helium for real process jobs inside semiconductor manufacturing, not for making the lobby feel festive. Helium helps with thermal control and purge steps, and in some parts of fabbing, there isn't an easy swap. Step 1. On March 2nd, 2026, Qatar halted LNG and associated products at Ras Laffan after attacks tied to the Gulf War. Because helium is pulled out during natural gas processing, that doesn't just hit fuel. It hits helium too. Step 2. By March 4th, Qatar Energy had reportedly declared force majeure. Plain English, we can't deliver what we promised because the situation blew up. And some reporting said the outage pulled about 30% of global helium supply out of market flow. Step 3. Tom doesn't panic on day 1 because fabs usually have inventory. But not endless inventory. One industry estimate put practical on-hand supply at about 6 weeks, so now he's on a countdown. Step 4. Even if some helium exists somewhere, it still has to move. And the Strait of Hormuz is the choke point. Around 200 specialized cryogenic helium containers were reportedly stranded near the area. That's the proof this isn't theory. The stuff was physically stuck. Maybe suppliers can just reroute it. Not that fast. Step 5. Industrial gas firms like Air Liquide start reallocating supply, and fabs start drawing down tanks, paying more, and deciding what matters most. Meanwhile, AP reported later damage at Ras Laffan could cut annual helium exports by 14%. And here's where it comes together. AI is not just code and capex slides. It is industrial plumbing. If Tom can't get enough of one obscure gas on time, he doesn't necessarily shut the fab. He reprioritizes, delays, and squeezes. And that's how a war turns into a bottleneck. And this is where the story leaves the clean room and walks straight into your wallet. Because helium gets scarce, suppliers start allocating by importance. Chips and medical usually go to the front of the line. And because spot helium prices reportedly doubled, fabs don't just face a chemistry problem, they face a cost and scheduling problem. The most profitable lines get protected first. The lower priority stuff waits. And that matters because the same chip ecosystem feeds your phone, your laptop, your car, cloud servers, and the GPUs behind all the AI tools everyone now treats like electricity. If a key input gets tight, production doesn't usually vanish. It gets reshuffled, delayed, made more expensive. So your next gadget gets harder to justify, product launches slip, and AI services can get pricier over time as infrastructure costs stay sticky. South Korea saying helium stocks could last until at least June is actually the perfect clue here. That's not all clear. That's the clock is running, but not yet at midnight. And honestly, nobody says we're fine until June when a supply chain feels healthy. Because expectations for semis and AI names were built on smooth scaling, even a temporary bottleneck can hit stocks before it hits store shelves. And if your savings are sitting in a tech-heavy index fund, or your compensation depends on RSUs, that volatility becomes very personal very fast. Your down payment looks shakier. Your housing math gets less fun. Your sense of job security, especially in tech and hardware, gets a little more caffeinated. So people adapt. They keep the old phone another year, they stretch the laptop, they put off the upgrade and pretend it's intentional minimalism, which is amazing, really. The future of AI may get slowed, at the margin, by one of the least charismatic gases on Earth. The lazy version of this story comes in two flavors. One is doom posting. Helium gets tight, chip fabs stop, AI dream over, cue dramatic thumbnail face. The other is the shrug. It's just helium. Suppliers will figure it out. Move along. Both versions are too neat. Reality is messier, which is why it matters. The doom crowd does have one real point. This is a genuine bottleneck. It touches semiconductor production, and these systems do not like surprise shortages. But the dismissive crowd also gets something right. Inventories exist. Supply can be reallocated. And critical customers usually get protected before the pain spreads everywhere. Here's the clearer picture. On March 31st, Reuters reported South Korea had enough helium stocks to last until at least June, and the industry ministry said no first-half disruption was expected. That doesn't mean the problem is fake. It means the system has shock absorbers, temporary ones. And that's why this barely breaks through. Helium shortage sounds like a novelty headline. The path from industrial gas to AI servers is invisible. Headlines like clean endings. This story doesn't have one. The uncomfortable truth is simpler. The most advanced industries on Earth still rely on obscure physical choke points, and optimism tends to price that in way too late. The real takeaway is that the AI boom isn't just a software story or a hype story, it's a physical system resting on a handful of concentrated choke points. I make these videos to trace the hidden infrastructure underneath the headlines. What other boring input do you think could blindside a major market narrative next? Power, water, copper, cooling, something else? Answer in the comments. The future is built out of bottlenecks.